All right, good morning, everybody. It's a Tuesday edition, Tuesday pre-snowstorm edition of Zoomed In Real Estate. And hopefully my last Zoomed In Real Estate. Who knows? You never know with these things. But we've got a lot of people coming into the room. So we're going to give everybody a second to get connected. We'll wait till the numbers level out. We've got two really, really great special guests who you can probably see on the screen right now. We've got a few people behind the scenes who keep us all organized as always. So we'll give them a shout out. But we'll just wait a little bit more. We're starting to see the numbers balance out here. But we're joined by probably two of the people who are most responsible for us being able to do this year. One, because they helped us stay in business, and two, because they helped bring this whole thing about and pay for it and structure it and do all that stuff. So it's really exciting to end my tenure of Zoomed In Real Estate, or at least my official tenure of Zoomed In Real Estate, with both Charlotte Green from the Cooperative Bank of Cape Cod and with Christian from NAR, who's been a guest 3 or 4 times on this already. And I've been on so many calls with you this year that I don't know how many if I can count anymore. I'm definitely beyond fingers and toes with that. So we've now got what seems to be a level number of people in the attendees. So as always, if you've got questions for Charlotte, if you've got questions for Christian, if you've got questions for us, you've got that Q&A button on the bottom, and we'll try to type the answers and respond on video here. And then if you need any help or any comments, you can put those in the chat on the bottom. This, as always, is being recorded, so you can reference back to it. And it will be available. I'm sure it's going to be sent out by email in a day or two and be available on the CCIAOR website. And we'll probably put a link to it in Facebook as well. So Ryan will be with us shortly. Marissa, as always, is behind the scenes making this all work. I'm tempted to force her to come on camera just so you can all see her once this year, because she's really the one who's made this all work all year. But before we get into that, I'm going to say, although I'm not in my basement, I was tempted to be in my basement today to go back to the original Zoomed In style. It's been a pleasure coming to all of you this year in Zoomed In Real Estate. I hope it's been helpful. I hope we've given you information that you can use in your business. And I know the entire leadership team of the association has been grateful to be able to do this year, but also continue this on as a standing part of how we interact with our membership in the year ahead. So without further ado, we do this because of the Cooperative Bank of Cape Cod and their great sponsorship of many of our programs, but especially their title sponsorship of Zoomed In Real Estate. Charlotte, you've been with us a couple of times this year. You've kept us informed, and there have been some recent changes. So first, thank you to you and your team for supporting us all year long and for many years, for bringing this to us. And, first, I think, just let us know what's gone on recently with loan limits and some of the changes we've seen.
Sure. Thanks for having me today, Greg. And thank you all for being here. The big news on the mortgage streets right now is the increase in the conforming loan limit going into place for 2021. Any loan being delivered to Fannie Mae or Freddie Mac starting January 1st, 2021 can be as high as $548,250. So what that means for people is their loan amounts can be higher and still receive conforming interest rates, which are usually a little bit more competitive than jumbo rates. And there's also some more down payment flexibility with those. What is so fascinating about this to me is that this is the 3rd year in a row that we've seen a conforming loan limit increase. And they're pretty sizable increases as well. And as a point of reference, the loan limit previously had been at 417 for years, many years. So the consistent increases we're seeing are really indicative of a strong real estate market across the board, year over year. We're able to put those new conforming loan limits in place for people who are under contract now and are going to be closing in January. So our buyers are all really excited about that. And just to be clear, it's the amount borrowed, not the purchase price of the property itself. So it gets a lot of people out of that jumbo territory and has been helping people with their low interest rates and low down payments.
Yeah, I mean, I would imagine that as we've seen our median sales price climb this year on the Cape and on the islands, that many more people were right on that edge of jumbo or, conforming, or, and this probably helps, maybe not as much percentage wise as our median sale price, but it helps most, especially those who have the 20% to put down, to stay within those really, really amazing rates that we're hearing about and we're seeing out there. I mean, have you seen that there's still a strong, steady wave of loan applications coming in, or are you starting to see maybe a decrease in the activity overall in the mortgage market?
So historically, things do slow down around the holidays and into winter, but we are still seeing strong application volume for refinances and purchases. People really want to take advantage of these low rates and get into homes. Something interesting that we're seeing too is a lot of cash buyers coming to us who want to pull the equity out of their house shortly after closing. So they might have put in a cash offer with no contingencies to be really aggressive in this market. But even before they're closing, they're coming to us and they're applying to take that equity back out so they can keep it in the market. With rates so low, a lot of really high profile buyers who we typically would have seen just straight paying cash are financing in order to keep more money in their pocket or in their investment accounts.
Yeah, I mean, I know all of us who have been representing clients out there in the field, we've experienced the pressure on the number of offers, on the contingencies that seem to always be needed and wanted by our buyers, but maybe not as welcomed by our sellers. And it's interesting that for such a sustained period of time, we've seen not only rates stay low, but I mean, it seems like rates are still going down in a lot of cases, although we see some fluctuations, right, on a week by week basis. But it seems like compared to where we were a year ago, that we've seen consistent downward. And, is there any forecast out there? I mean, none of us have a crystal ball. We're not going to put you on the spot. And yes, we did say this was recorded, so we can reference back to it. But, have you guys heard any guidance from out there in the financing world on what forecast would be for rates?
Everything we've heard out there is that the rates are going to stay low. We do not anticipate rates to be going up anytime in the near future. So I would think at least through 2021. But as a full disclaimer, if I could predict rates, I would be on a yacht in the south of France right now.
Yes, absolutely. All of us would be. It's a good thing to aim for, hopefully, right? Now, one thing I know was a trend early in the year, and I'm talking January, February, was, it seemed like a lot of lenders were saying we can close really, really quick, really, really quickly, really, really quickly. We can close in a week or 2 weeks or 3 weeks. Obviously, when we got to April, May, and June, that was like, hey, we can close in 3 months. And let's be conservative about this. Appraisers were super backlogged. Underwriters were super backlogged. Have we seen any movement in that over the past couple of weeks? Have we seen any changes in the trends there?
There is certainly a lot of pressure on the system right now. As you mentioned, appraisers are backed up, attorneys are backed up with title, underwriters are backed up as well. Now that things have leveled out a little bit and we've been lending in this environment for quite some time, we're more nimble and we're able to close our purchases in 30 to 45 days, depending on the customer needs.
Right.
So we're certainly prioritizing purchases because we know those timelines are so sensitive in order to get those deals, those offers accepted and loans closed.
And obviously, if a borrower gives you the perfect packet of information with all of their credit history, all of their employment history, all of their previous tax returns, you can probably do it really quickly. But if there's a lot of back and forth, then all of a sudden it gets somewhat complicated, and much, I would assume, much longer to close right now.
Yes, 100%. We do need certain documentation, and COVID has not made that any easier. There are a lot of increased documentation requirements, especially for self-employed borrowers. We're seeing year-to-date profit and losses being required, as well as business bank statements to back up those earnings to make sure that they're consistent. And that is not something we've needed in the past, so that has, created a little bit more legwork for the customers when they're buying, but we're setting those expectations up front and letting them know what we need early in the game so that we're setting ourselves up for success.
Perfect. Now, with a couple minutes left here, is there anything else, from either a big picture or specific to Cape that you've experienced this year that you think our membership and your clients need to know about or be reminded of as we go into the start of a new year?
The big things we've been seeing are tons and tons of construction and renovation financing. So either buying land and building that perfect dream home, or finding that home that, isn't quite right, but it's in that perfect location, and renovating it. And we can do that as part of the purchase, or we're seeing a lot of cash buyers. They're coming back to us for the construction financing afterwards. So you take that home in the great location with the 70s shag rug, turn it into a beautiful property. We're seeing a lot of that. And like I said earlier, we're seeing a lot of people coming back to us after paying cash and pulling that equity back out of their home. So if you have someone on the line thinking, okay, I do want to finance, but I know that the cash is going to be a much more appetizing offer for a seller, please be sure to let them know to call us and we can talk about those options with them.
Yeah, I mean, I know one thing we always talk about with our clients, especially as the calendar turns to a new year, are, what are the ways that we can reach out and connect with our clients who, it's still a pandemic and it's the holiday season. It's probably not the first thing on everyone's mind that, I want to go sell a house right now, or, I want to go buy a house right now. But a lot of those who did buy with cash in April, May, and June, when we saw big closing volume happen, are probably eligible now for a cash out or a first time financing on a property that they've owned. And so this is maybe a great opportunity for our members to go out and reach out to their customers and say, hey, here's a great opportunity. And I can get you in touch with Charlotte, who's been helping us and supporting us through this whole time. So given that, how does everyone reach you? How can everyone contact you? What's the best way to connect with Charlotte these days?
So I can be found online on mycapecodbank.com or mycapecodlendercharlotte.com. Thank you, Marissa, for putting my contact info in the chat box. My cell phone or my office line is flooding right over to my cell. So I am accessible and happy to answer your questions. And Greg, I just want to go back to that cash out after buying for cash. There's no wait period for us. So
Okay.
People are really excited about it.
So to me, that's a really big deal. So can you say that in words that I can understand? So if someone buys a house today, when can they then apply to you for a loan on it?
If I am buying a house with my own assets that have been verified in a bank, paying cash, I could, while I'm waiting for my purchase to close, simultaneously be applying for that cash out refinance and close a week or two after on my refinance from the purchase date. Typically, there's a 6-month seasoning period if I was to obtain financing to purchase a house and then try to take equity out. In this instance, there is no 6-month seasoning period, so people can apply before they've even closed on the purchase of their home.
So like that alone, like that's mind blowing enough that we could just, Christian, love you, man. But like, I think we're done here. I think we've served the membership and we can just go off and work on that all day long. No, I mean, that's a huge deal. And I think most people assume they have to wait 6 months, or they assume they have to, get past certain benchmarks before they can advise their clients to go do that. So it's good that you're here to advise us on that. And again, it's worth the price of admission on that alone. So thank you so much for laying that out. Anything else you want to share with us before I know you're crazy busy, before we let you continue on with the rest of your day?
Sure. I just want to thank you all for being here and let you know the Coop is so appreciative of all of your referrals. We have loan officers across the Cape and are more than happy to answer any questions you might have.
Great. Well, thank you to you, your whole team. It's been you most of the times. We've had some of your team members some of the times, but it's always been great representation from the cooperative bank. And without you guys, it would have been much, much harder to serve our members as well as I hope we did this weird, strange year of 2020. So if anyone else needs to contact Charlotte, her contact info is in the chat, where you can always just reach out to any of us and we know where to find you. A past affiliate of the year winner and a great member of our community inside and outside of real estate. So thank you for all that you do.
Thank you, Greg.
All right, now it seems like we have Ryan. So Christian, you're off the hook with me because I think Ryan's on, but I still will say welcome and thank you to our regional NAR, all things behind the scenes guru, for our advocacy efforts, but also all the government affairs interaction that goes on with the New England region, which, we're from Massachusetts, we dominate it, as we should, but also helping us understand what we need to do to be better partners with the National Association and with Congress and with the executive branch. So Christian is here, Ryan's here to kind of drive the bus. So I will step back, but if anyone has any specific questions for Christian or for Ryan, remember that Q&A button on the bottom is the best way to do it. That's how we can keep track of them, and then we can make sure we can get your questions answered. So Christian, thank you again for being here. I'm sure I'm probably going to be on another meeting with you at some point before the year's over, but thank you for joining us. And Ryan, Christian, off to you.
Great, thank you guys very much. You might see this little one behind me walking around. Ignore him. A little cold today, so pulling a little double duty with the wife at a doctor's appointment, so he'll be fine. But Christian, so yesterday there was a bipartisan press conference around coronavirus relief. What is the latest out of DC on coronavirus relief? And then we can get into what we expect next year's Congress to look like and act on.
Yeah, sure thing, Ryan. Hi, everybody. Good to see many of you again. For those who don't know me, my name's Christian Hoysradt. I serve as NAR's political director for the 6 New England states. I'm based here in Washington, D.C. I'm a native of the other Cape, born and raised in Gloucester on Cape Ann, and it's always a pleasure to speak with my fellow Bay Staters. So really, this morning, there are 2 big questions looming over Washington. Number one, will Congress avert a government shutdown before we run out of money on Friday? And 2, will Congress finally come to a compromise and pass additional COVID relief, as Ryan just mentioned? So I actually just hopped off a call with my colleagues from NAR's lobby team here in DC. And I will say they are the most optimistic I have heard them about the current state of negotiations on both government funding and coronavirus relief. So first, on the government funding front, we're hearing that House and Senate lawmakers could file what's known as an omnibus spending bill as soon as today, following successful negotiations yesterday. For those who don't know, an omnibus is a type of bill that packages a number of smaller ordinary appropriation bills into a larger single bill. So in this case, we're expecting Congress to kind of package 12 smaller spending bills into one big one. Omnibus bills also allow for Congress to tack on other pieces of unrelated legislation. So in the past couple years, for example, this would be the time of year where you would probably be hearing about the expiration of the National Flood Insurance Program. In case you missed it, NAR was able to secure a 1-year NFIP extension earlier this fall that actually reauthorized the program through September 2021. But in the last couple of years, we've been having to try and get NFIP tacked onto the kind of end of year spending bills. So we don't have to do that this year. But what the omnibus does do is it provides a legislative vehicle to potentially tack on additional COVID relief. And so with the government running out of money this Friday, Congress has to pass something to avert a government shutdown. And the thought is that additional COVID relief could be tacked on heading into the new year. So where does that sort of leave us? You may recall that the last round of COVID relief passed by Congress was way back in April, where they provided an additional infusion of money to support the PPP loan program once it had run out of money after the initial loans had been given out. So, it's safe to say that we are now the closest to a compromise on additional relief than we have been in the last 8 months. Over the last few weeks, you should note, NAR has been in touch with congressional leadership to make sure our priorities for realtors and small businesses are clear. Our priorities include federal rental assistance while the eviction moratorium continues, small business relief through additional PPP loans and easier forgiveness of those loans, extended unemployment assistance, state and local aid, investments in technology to allow for remote online notarization and broadband expansion, as well as additional support for commercial real estate. So as Ryan mentioned yesterday, a bipartisan group of senators and House members, now known, I guess, as the 908 Coalition, introduced a $908 billion COVID relief package. The key to this bill is that they've split it into two parts. Part one is a $748 billion proposal that covers provisions that Congress widely agrees on. And that also includes many of NAR's priorities, as we outlined for congressional leaders. The second part is an additional $160 billion for state and local aid that's contingent on an agreement regarding liability protections for businesses against COVID-19 related lawsuits. And so, as you may have heard on the news, Democrats have been as insistent on the inclusion of state and local aid as part of the relief package as Republicans have been on liability protections for businesses. And so by splitting this compromise package into two, it makes it far more likely that Congress could pass the agreed upon provisions while punting the two items that Dems and Republicans have disagreed on, the state and local aid and liability protections, off until 2021. So what's included in the first part of the bill, the $748 billion package that looks to have the best chance of passing here as a tack on to the spending bill before this Friday? We have $300 billion in help for small businesses through the Paycheck Protection Program. So businesses who have been adversely impacted by the government shutdowns, who can prove loss of revenue, they'll be able to apply for a second round of PPP loans. So that's $300 billion there. We're also going to see $180 billion for additional unemployment insurance, which would extend the Pandemic Unemployment Assistance Program, or PUA, through March 2021, and would also include $300 a week of enhanced unemployment benefits for those accessing unemployment. So if you recall, through the CARES Act, that bill had provided last year an additional $600 on top of regular unemployment. This compromise bill reduces that in half to just $300 a week. But again, for realtors who are relying on unemployment assistance at this moment, this bill would extend the PUA program through March of next year and include an additional $300 per week.
On that, it's important to note because
go ahead, Ryan.
On that's important to note because that's the assistance independent contractors eligibility runs out at the end of this without that extension, right?
That's correct. Yep. So the Pandemic Unemployment Assistance Program that for the first time made realtors eligible for unemployment benefits, that program expires on December 31st. So without this bill passing, PUA comes to an end.
And I've had a lot of calls from people that say, well, in this market, can I still take PUA and all this? And I said, absolutely. Like, it's whether your business has been impacted by COVID, by the pandemic or not. And I think a lot of people will make the case is, we're down to well under 800 single family homes for sale on the Cape Cod. Like, I think that the pandemic has really diminished the homes for sale. So if you have buyers looking or aren't taking the listings that you normally would have, absolutely. Even though we've had a really good real estate market and a lot of sales, we still have had people impacted by the pandemic because the market is still impacted by the pandemic.
Yep. I think that's right. I also just saw a question here. Are there any new provisions for PPP loan forgiveness in the new package? From what we've seen thus far, that we do not see any new provisions for it. We're still trying to analyze the language as it was just released yesterday. So if we see any changes in the provisions, we'll be sure to let folks know. I can tell you that NAR has been pushing for Congress to pass a provision that would basically automatically forgive any PPP loans under $150,000 through a one-page, affidavit saying that they use the loan for the intended purposes. So as soon as we kind of figure out exactly what is entailed in this compromise bill, we'll be sure to let folks know if there are any changes on that.
But there is 300 million more money in the bill, 300 billion more money, sorry, right, for PPP.
Yes. Yeah. So $300 billion more in this compromise bill. So again, that would allow for businesses to access a second PPP loan as long as they can obviously show a reduction in revenue. I believe it's something like year after year or year over year. So just a couple other items included in this bill: $45 billion for transportation, including helping to save the airline industry; $82 billion for schools; $16 billion for vaccine distribution; $10 billion each for childcare facilities, the U.S. Postal Service, and $10 billion to help expand rural broadband. And then finally, a big piece from NAR's perspective, $25 billion in emergency rental aid, which would obviously help our landlords given the current eviction moratorium. Now, I will say at this moment in time, that $25 billion as written in this bill is earmarked to states. So then it would become the state's responsibility to determine how to actually distribute that rental assistance. NAR's preference and what we've been advocating for is for that rental assistance to go directly to the housing providers so that they can help, so that they can pay their outstanding mortgages, given that they've obviously lost, some folks have lost revenue during the course of this eviction moratorium. However, at this point, it would ultimately, come down to however Governor Baker and the state legislature decided how to go ahead and distribute that emergency rental assistance. This bill would also extend the eviction moratorium through January 31st. Right now, the eviction moratorium ends December 31st, so it would extend it for 1 month. With that, are there any other questions on the relief bill before I kind of head into what NAR is going to be focusing on in 2021?
Yeah, I don't see anything else coming in now. If there is, they can put it in. We can get back to it as well to clean that up. But yeah, overall, what is the landscape of Congress and the administration for NAR moving forward, and what will be the priorities of those, and how do they match up against NAR's? What are NAR's priorities for next year?
Sure. So on the campaign trail and heading into this new administration, President-elect Biden had introduced and indicated support for a $15,000 first-time homebuyer tax credit. So from NAR's perspective, that is a good idea from his camp, and we hope to work with the administration to introduce legislation to enact that through Congress. We will also be working to further educate the Biden administration on the importance of 1031 like-kind exchanges. There has been some chatter about the administration possibly eliminating the like-kind exchange benefit. So we are already in talks with folks to make sure that we can preserve the 1031 like-kind exchange program. Looking at additional tax issues heading into this new Congress, NAR will continue to try and end the SALT deduction marriage penalty. So that's the state and local tax deduction marriage penalty, where single filers can deduct up to $10,000 on their state and local taxes, whereas joint filers, instead of being able to deduct $20,000, they too are only allowed to deduct 10. So we are trying to raise that deduction cap to 20,000 for joint filers. And then,
and then on that cap, is there also any movement around indexing for the future? Because the problem is 10 years from now, that's still going to be the cap unless you figure out how to index it.
Yeah. So of course, NAR, when it comes to SALT, we always support the indexing for inflation. So that certainly will be part of our discussions with congressional leaders as we head into this new Congress. You know, I had mentioned that one of NAR's main priorities, you know, with regard to the COVID relief is state and local aid. And part of our concern there is that as you know, states miss their revenue projections, they're going to have deficits to make up for heading into next year. And our concern is, you know, the way by which states will go ahead and make up those budget deficits is through new taxes. And so that's why, from our perspective, state and local aid is so important to help close those budget gaps so that we don't see, you know, increased taxes across the board, across the country. And so the other thing to keep in mind is that with a Congress so, you know, closely divided in terms of both the House and the Senate, it's likely going to make any type of sort of tax reform more complicated, both from the Republican and Democratic perspectives. So, you know, it remains to be seen sort of where we'll head on that. But I think with a more divided Congress, I think you're likely not going to see as much movement on tax reform as you may have otherwise seen had one party garnered more success in the recent elections than the other. So just a few other issues we're looking at in 2021. Infrastructure is always a bipartisan issue where Democrats and Republicans seem to find common ground. So we expect infrastructure spending to be a pretty good area of potential compromise and focus for the Biden administration heading into the new year. And then we're also going to be closely watching what exactly happens with the GSEs, Fannie and Freddie. As you may all know, the Fannie and Freddie have been in conservatorship since 2008. The FHFA director, Mark Calabria, is likely going to be on his way out as a new administration comes in. Calabria has been very much in favor of removing Fannie and Freddie out of conservatorship. You know, they've already gone ahead and increased the capital levels for Fannie and Freddie heading into, you know, these waning months of 2020. That being said, we don't expect the Biden administration to move to get Fannie and Freddie out of conservatorship, you know, in the next couple of years. So that being said, you know, if the president does end up appointing a new director, you know, that'll entail a new set of priorities from that individual. So those are just a few of the items that we're watching heading into 2020. And before I kind of wrap up here, I did also just want to extend my thanks to Greg for all of your leadership and stewardship of the Cape and Islands Association through this crazy year. It's been a pleasure working with you. And with that, Ryan, I'm happy to take any additional questions.
Yeah, we've got a question, you know, just someone wanting to connect the dots on infrastructure and real estate and how you talk about the infrastructure investment helps real estate so much.
Yeah, you know, for us, you know, for our members to be able to sell houses, they need strong communities, right? People want to be able to live in those communities. And so for us, making sure that states and municipalities have money from the federal government to maintain their roads, maintain their bridges, to expand broadband internet in rural places that don't yet have it. From our perspective, those are essential items that are needed in order to make for a good housing market. And so anytime we talk about infrastructure investments, NAR is on board, and we're hoping that infrastructure is going to be a place where Democrats and Republicans can find some commonalities here as they try to pass legislation through in the new year.
Yeah, I mean, just look at the stuff, access to Cape Cod and some of that stuff is so huge for us as a local initiative, right? Where are we going to get this money to replace the bridges to the Cape? they're federal bridges right now. Like there's a plan to move them over to the state control, but it's going to come from federal investment, right? Federal transportation spending to replace the bridges. Broadband as well, like you said. I think that Falmouth recently concluded a study that said that they need that broadband, that fiber to homes is feasible, and that there's a market for it. So how does Falmouth try to move forward on that plan, and other towns could move forward? I know there's some other towns talking about it too. The matching money, things like that from the federal government, investment of expansion of broadband is how you do that. So while the most likely federal investment in infrastructure doesn't happen, as you talked about with rental assistance, it's not going to happen directly to the project. It goes to the state. The state then has a pool of money for you to be able to match state money with, and federal money with, and local money with, to take that investment.
You got it.
So that definitely is. And then question was, please help us talk about the dynamics of Fannie and Freddie conservatorship, and in a way that we can convey it to the public. I guess they're asking the why it matters, or what's there. I mean, ultimately, the idea is finding a path for Fannie and Freddie that preserves a 30-year fixed rate mortgage, right? Isn't that the goal?
Right. Yeah, I mean, that's it. We just want to make sure that, NAR's goal in when you're talking about this in to the general public who doesn't know what a GSE stands for, NAR is committed to making sure that the 30-year fixed rate mortgage sticks around for as long as can be. And our goal is to make sure that as many people as possible have access to credit in order to finance a home purchase. And so for us, making sure that Fannie and Freddie are stable entities, that is, from our perspective, like that's what's most important. Just speaking in like the most basic layman terms, that Fannie and Freddie are stable, that they're providing mortgages, and that the 30-year fixed rate mortgage is something that isn't going anywhere. And so part of the concern is, they were put into conservatorship because of the issues surrounding the housing crisis in 2008. The concern is that pulling them out of conservatorship could destabilize the secondary market. And so we want to make sure that if they are going to come out of conservatorship, that there's a good plan in place. And NAR would actually like to see Fannie and Freddie transition into a public utility model where they still maintain government backing while standing on their own 2 feet as entities. So I may have got a little more confusing than I wanted to, but at the end of the day, just know NAR is committed to maintaining access to affordable mortgage financing, and making sure that we keep the 30-year fixed rate mortgage accessible for the future.
Awesome. Thank you, Christian. And as always, you're kind of the conduit for our association with the NAR. So if anyone has any questions or anything, they can reach out to you for more information, right?
You got it. Yep. And I'll go ahead and put my contact information in the chat box.
Awesome. Now, before we wrap up, I want to share a couple things, updates from the association as we get going. So hopefully you are seeing my screen. And maybe Greg or Marissa will chime in just in case I'm not, but I think I'm showing the right screen. So obviously I want to talk about CE schedule. We have 4 classes scheduled through the end of January, so 1 more this year. It also is one of our base classes for the CCRES, the Cape Cod Real Estate Specialist designation. So please sign up for that if you're interested in that. As we go forward. And then in January, on January 13th, 2021 is a renewal cycle for the Code of Ethics. So if you do not have your Code of Ethics yet, you might want to go ahead and knock it out in January, when we expect probably to be kind of in this house in our houses for a little bit longer before the vaccine becomes available and you can get all that done and get out there. So take your Code of Ethics in January, on January 13th. Also, we delivered more than 50 welcome home baskets to the Housing Assistance Corporation. I just have to thank our community member engagement committee who spearheaded this, but they filled these welcome home baskets. These are for people in transition from homelessness to stable housing and things of that nature, and some of these people in real need of things around their house to kind of get them going and back in with stable housing to fill their house up and have household goods. So want to thank everyone who participated in that and helped us through that. It was a great turnout. And that leads into our next initiative with the Housing Assistance Corporation. We are less than $800 from matching our $10,000 matching campaign. The association put up $10,000 and raised $10,000 from you guys for a $20,000 campaign to the Workforce Housing Relief Fund, which kind of goes to the rental assistance, as Christian is talking to, help these landlords pay their bills on this stuff. Real estate has been really good on the Cape Cod this year. If you've had a really good year and have some extra funds, we would encourage you to take some time and invest some money in here. Marissa's going to share the link out. There are what this year's done is really expand between the have-nots and the haves, especially in real estate and stable housing world. So we encourage you guys to contribute in that. And then also we rolled out a new partnership with Deposit Link. We heard from our members saying, I need to figure out how to make electronic deposits. And so we looked at the best software out there, and Deposit Link, we partnered with them. So you can find out more at ccr.com/depositlink. Once again, hope you're using FlowPlan. We're hearing so many great things about it. I saw Katie Clancy's on and Jeff Klontz. They're swearing by FlowPlan for their buyers and their sellers. $12 for a floor plan, really easy to do on your phone. Our goal is to every listing should have a floor plan, whether it's a flow plan, whether it's another floor plan technology creation tool you use, but that's a better experience for the buyer if every listing can have a floor plan. Congratulations to our newly elected board of directors for 2021. This is our executive committee leadership team. Annie Blatz will serve as the president, Laura Clements is president-elect, Peggy Nye is your treasurer, and Greg Kiley is your immediate past president. Greg, I know you're on still, I think. Come back on and, talk about our board at all that we just elected. The new members are in the red, coming back on. Some of them are repeat, coming back for a second term, Mari and Courtney. But new members of the board, Wendy Blue, Jen Whitaker, Patrick Foran, Mary O'Donnell, joining the returners of Emily Clark, Stephen Mari, and Jack Oggett. So that is the CCR board directors for next year. Greg?
Yeah, well, and around me, and apologies to Mari and Emily who are blocked by my torso, but we also need to thank last year's board who are surrounding me in my background. But some of the biggest, toughest questions that we're going to have to confront are still in front of us. I will say that I was just texting with one member of our leadership team for next year about some of the things that we're going to have to confront when it comes to rules governing MLSs and what the associations can be involved in and what the Department of Justice wants the associations to do or not do. Our board of directors and our leadership team on Cape Cod, I will put up against any local association nationwide in terms of their experience in the industry, their intelligence on the matters that we're going to have to address, and our ability to work together as a unified team. We have the best that I've ever seen. And we don't say that lightly, and we don't take that responsibility lightly. There's some big issues in our industry, and I would not wish us to have a team any better than the team we have. So it's an honor to watch next year's leaders do their amazing work and be a small part of it, I hope, moving forward.
And then one of the things we did this year was change our governance to the bylaws and kind of separate the association MLS board. And so we have different boards moving forward. And for this first year, some of the same faces as we try to keep some of the initiatives we have going. And then over time, there'll be more separate people. And then the CCI MLS board that was elected for 2021, Emily Clark as the president. It'll be a 2-year term for her as president. She's also president in the DR of Robert Paul Properties. Annie Blatz as a director, Greg Kiley as a director, Natalia Whiter as a director, and Brian Greer as a director. Then what we also did on the MLS board is create 2 industry directors, guys who are out there in the industry that are not members of ours, but they're either real estate brokers or something else in the rest of the country. And I think we found a lot of good people apply, and a lot of good people expressed interest in wanting to be part of our board from around the country. We selected 2 that we think are exceptional. Jay Thompson, who's a former brokerage owner in Arizona, who sold his brokerage and went to work for Zillow for 7 years, then retired and now lives in Texas. But he speaks and writes around the real estate industry around the country now. And he's one of the foremost thought leaders in the industry on this. And then Johnny Mowad, who is finishing up his time as president of the volunteer president of the North Texas MLS, which is the Dallas-Fort Worth area. He's a realtor with Evie Holiday down there in Dallas. And he is the incoming vice chair of the NAR MLS Forum. So really good, experienced leaders from around the country coming and joining us as far as trying to help us solve some of these big issues and how we move our MLS forward. Greg?
Yeah, and we're unique in Massachusetts. There are 2 smaller MLSs out there that are realtor affiliated, realtor owned. Obviously, while realtors are involved in the decision making at MLS PIN, they are their own corporation, and so they are playing in a different sandbox than we are. And a lot of the policy discussions that happen at NAR happen from Massachusetts people who aren't usually affiliated with running an MLS. So it's really great that not only do we have a strong, vibrant MLS leadership team here with some really great new voices and some of the most experienced people we've ever run into in the industry, but we also have the 2 outsiders who, of course, they're going to add value to our conversations, but they're also going to help connect all the great stuff we're doing here with the powers that be at NAR, so that when MLS policy is being made, it's being made in a way that's informed by some of the things that are happening with us and our clients, so that we stay more in line with the client experience that we strive to deliver every single day. So I think that's it's an industry changing step that we're taking, and I'm really excited to, again, be a small part of it. Ryan, you're on mute.
All right. A couple other things I want to remind you. We still have the COVID order of no more than 10 people at a private residence. So as you're looking at showings, open houses, it's probably going to get tougher, and you're going to have to figure out how to adapt as people don't want to necessarily wait outside in the cold weather, especially with what's coming this week. So adapt with that 10 people in the house at a time. That is up as of right now, but the governor has a press conference at noon, so who knows what else restrictions will be announced at that time. The other thing is that, if you are having open house, if you are having showings, make sure you keep track of who's coming and going for the contact tracing, as they've stepped up efforts on enforcing the contact tracing. I was just got off a call earlier today from the regional health call of COVID I get on every week. We are at a time where we have not seen, even in March and April, of rising cases and hospitalizations and deaths on Cape Cod that we have not seen yet, and Martha's Vineyard and Nantucket. Nowhere we did a really good job locking down in March and April to where we didn't have those rising cases, so we are really experiencing the worst of what we've had now. I've heard more anecdotal feedback of people in my realm that have COVID than I did in March and April as well. I'm sure a lot of you guys are hearing the same stuff, so it's really urgent to be vigilant on this stuff and follow these rules that are in place for a reason. And then just to put in around what Charlotte talked about here, the low limits were for Barnstable, and then the high cost areas, Martha's Vineyard, Nantucket, and then Plymouth for 2021. I didn't include the Plymouth low limits for FHA because they get more complicated, whether it's a Boston urban area or more outside of Boston urban in Plymouth County. That becomes a more complicated FHA thing on that end. So that's some of our updates. We're going to be back at this on Tuesdays in January. Marissa can probably put the date for the next Zoomed In on January on Tuesdays. We're going to do Tuesdays at 10 a.m. I believe it's the third Tuesday of the month, unless there's something that conflicts with that mostly, but we'll be back to that. Hopefully we'll get Christian back in later in the spring as we can talk more about stuff. Hopefully maybe January, February, we can talk about coronavirus relief bill that passed, right?
I hope so.
And we had a question come in, but really a comment about Christian about making sure NAR thinks about when you set these caps nationwide, that some of it is indicative of the areas that we're in. And I think our membership is more sensitive to that because some of the high cost areas we're in. And I know that's something NAR talks a lot about. I think it probably becomes more of a red state, blue state problem a lot. But, when you're talking about, I know there's senators that don't want to have higher property tax deductibility in states with higher property taxes, right? But there's definitely things around making sure it fits regionally around the country. I know that's something NAR knows a lot about and thinks a lot about.
Yeah, for sure. And, obviously the cap on state and local taxes, it adversely impacted, high cost areas, without a doubt. And so, that's something we hear not just from Massachusetts, but California and Illinois and New York, New Jersey. So it's definitely on the top of mind whenever we go into any type of these kind of, tax discussions with congressional leaders. I'm actually, Melanie, thank you for sending along your question in email. I'm going to go ahead and actually connect you with Evan Lydiard, who is our senior policy representative for tax issues on the federal level. And hopefully, he'll be able to maybe share a few more insights in terms of both your feedback and suggestions.
Great, thank you. And as we wrap up, I'll let Greg wrap it up. But Ford just wanted to wish everyone a Merry Christmas and Happy Holidays for whatever they have, and a Happy New Year. And we'll see you next year, right, Ford?
Well, thank you again, Ryan. Thank you again, Christian. I know Charlotte's here. Marissa, I'm going to make you come on camera. Sorry, I'm going to force you to do it. You have to say hi.
Hi.
So Marissa is always behind the scenes, leading all of the stuff that we need to pull something like this off, to pull our board meetings off. I mean, Marissa's really the guru of everything operational on the association side. And you have a great team around you, but you are probably not seen by the public as much as the rest of your team. So we just want to say thank you to you for your great leadership through this year. It's helped us get through it. And you've got young kids. You've got a young kid at home. We're all dealing with this craziness, and you've sailed right through as calm as can be and helped keep us calm. So thank you for everything you do for us today and in the future. And then I do want to say to incoming President Blatz and incoming President Clark, you guys are two of the coolest people that I could ever imagine working with as we confront the challenges of our industry. So for Annie, for Emily, you're both good friends of mine, and you're both inspirational leaders. So I cannot wait to serve with you and be guided by you in the year ahead. And Christian's a great ally of ours. I know we're super excited to continue to broaden our relationship with you and all the efforts that you have on behalf of our region in the industry. And hopefully we can see you in DC. I don't know, that's still we're crossing our fingers, but I hope to get down to the NAR mid-year meeting in Washington, DC in May. It's such a powerful experience that I hope everybody at some point in their career gets to take part in. So we're excited to see what's ahead of us in 2021. We've made it through 2020, I think, knock on, we're getting close. But hopefully, above all, everyone stays safe, stays well. This was a year none of us will ever forget. And it's a year that's impacted Cape Cod real estate in ways that we couldn't have dreamt of in March and April, when we didn't know if our industry was going to make it through in certain ways. But that's because of the work of every member that we have in our association and all the staffs that support you in your local offices, and our team, not only at NAR and Christian's colleagues, but also at MAR. We've had Catherine Taylor and others join us so many calls. Teresa's joined us, Kurt's joined us. So thank you to all. It's been a tremendous year, and we will sign off, but please reach out to us with, I don't disappear, although I might take a day off at the turn of the new year, but if you need help, I'll still be on the MAR executive committee for the next 2 years. I'll be your NAR director, so I get to work with Christian moving forward. And a lot of exciting opportunities ahead for all of us. So thank you for making us the best local association in the state. You can tell all the other local associations I said that, and I mean it. It's a pleasure leading and working beside every single person on this call. So thank you.
All right, thank you guys. Have a good one.
Bye, everyone. Thank you.
Wait, bye-bye, Ford?
Bye.